What's going on, guys? It's Brinks Trades coming to you live with another week of breakdowns. Hope everybody is good. I think we had a little issue with the intro video that usually plays. But I'm back with you guys from the week. Yeah, I'm happy to get going. Again, if this is your first time watching, my name is Brinks Trades. I'm the resident indices analyst here on the Trading Nut podcast. And then also, obviously, I simultaneously stream this stuff to my own personal YouTube, which is Brinks Trades. New Jersey in the house. I see Tony here. I see Hugo here. What's going on, guys? Just high overview again. 10 years day trading. It'll be 10 years officially. The first trade I've ever taken live would have been in March in 2015. So it's coming up on 10 years, which is crazy. First introduced to trading about like late 2014. Started in Forex, moved to futures. As of recently, still look at Forex charts, but just, the futures market is just better for me and how I do things now. So I want to break down, obviously, the dollar, the indices, and then touch on some of the currency futures, which is going to be very similar to what you'd see like on Euro USD, GBP USD, etc. So, so hopefully everybody had a good trading week. I know this last week has been really crazy in price action. We'll go ahead and get to it. If you guys actually had the chance to watch me yesterday, I recorded a live stream on my personal YouTube channel. Again, it's Brinks Trades. If you guys are here, if you're subscribed to that, you can check that out. 10 years of knowledge. It's a lot of knowledge. It's a lot of knowledge. It's a lot of ups and downs. Trust me. Like, there was a lot of downs when it came to this trading thing for me, and it took a long time for stuff to click. And you guys have no idea how much time, even if you're one of my students, or even if you aren't, like, you have no idea how much time this took to put all this stuff together and really make it click. So don't ever like underestimate the journey. So what I want to do is just kind of go to the comment section, see who's in here first and foremost. Obviously, Tony, Hugo, it's all you guys. If anybody else is in here, would love to see where you guys are calling from and find out where you guys are watching from. And let's see. It's not that many people on. I know this week's gonna be crazy because it's an election week, so there's not really a whole lot of, like, I'm going to cover charts, but I'm going to make the huge disclaimer to say, like, please stay away from the markets this week. This whole week is going to be crazy. And I mean, maybe after the election, right? But like, I know everybody, at least I live in a swing state, so I've been getting hounded to death with all of these political ads over the past couple months. But it feels like every other ad I see on TV is a political ad at this point. Not to bring the conversation there. I don't want to talk politics at all. But I would say, like, best case scenario, Tuesday or Wednesday. I'm sorry, after Tuesday or Wednesday, the markets are going to probably be safer to trade. But if you've never traded during an election year, or if you've never traded like the week of an election, the markets are crazy. And so if I were just to reference things, if we go back to we could go back to December of 2020, November of 2020. This is just Euro USD. This bullish price action started pretty much the week of the election week. That's the daily time frame. But if I go to like dollar and I go back, dollar index, and we go all the way back to, let's say, like 2016 or 2020, you can see huge momentums. November 2020. So not as much with dollar, but I remember the 2016 election. There was the markets were just tanking and crashing. I think they were actually rising when whatchamacallit got elected last in 2016. Yeah. Pretty sure this was the start of it. This was the election week in 2016. I remember looking at like the Nasdaq in 2016 before I even really traded futures at all. If you go back NAS100 and go back to like 2016, there was just the market was just tanking and rising that day. It was extremely volatile, and it's like, yeah, this is a situation that maybe you could, potentially gamble on, but it's like, why risk it, right? So the point, I guess, is what I'm saying here is, yeah, I'm pretty sure this was the day after the election. So technically, in the forex markets on NAS100, this is going to be that Wednesday night or that Wednesday morning is going to be the night after the election, right? So that Wednesday. I mean, so we had a wick of, excuse me, one day where the markets pretty much moved like 400 points in a day, right? And that was just in Nasdaq. So literally about 10% of the Nasdaq, it moved in just a day, right? And we know that, the markets use news to kind of clear out volatility and kind of move the markets around. But I think it's going to be a really crazy week, especially with all of the stuff at stake. And I don't want to go into like election issues and all stuff like that, but there's a lot of emphasis on this election. So I would just stay out of the markets this entire week, and that's what I'm going to do. But I would probably say, if you're an experienced trader, maybe Wednesday, Thursday, Friday, you might see some setups. And so what I want to do really quickly, first and foremost, is actually just look at the news, and then we'll hop in the charts. So I know the election is going to be happening on, obviously, Tuesday. But I want to see what else is going on. So red folder news, all day presidential election. So this is going to be just, again, congressional elections as well. I didn't realize it was a congressional year too. That makes a lot of sense. So there's going to be a lot of volatility depending on this stuff. Then we're going to have FOMC on Wednesday. Oh, yeah, this is a dead week. This whole week is going to be crazy. And it really started with NFP on Friday. And I was telling people that the next week is going to be crazy. So not only is this an FOMC week, this is a presidential election week and a congressional election week. And so you don't really want to be in the markets when this happens. The market makers will use this as any opportunity to kind of move things around. So you want to stay out of that and just kind of let stuff rock. And but I will do what I think is going to happen. But I mean, to be honest, this week is anybody's guess. And most people will say that they can predict these type of things or predict the news, and to be honest, they can't, because they can just take a price for 15 minutes after the projected winner is announced, and probably that next day in the markets they can take price and just move it wherever they want to. They have pretty much full reign to do that. So especially since this is a once in a 4-year event. So last week, what I called out on dollar index, I wanted to see a few things happen. I wanted to see the market. So our target for this week was really this old weekly fair value gap. If we look at the weekly time frame, I wanted to see the market reach up into this gap. And I'll just make this a little shorter so you can see. Right. So that weekly imbalance, that weekly fair value gap, I wanted to see the market run into that level. We also, and I really wanted to see it come out and take out this old high. And we pretty much stopped just shy of this. So again, if you're one of my students, you know that if you're just looking at these two highs, these are relative equal highs. They're not as clean. You can't as easily see them on the daily time frame. But again, if you jump back up to the weekly time frame, relative equal highs. These highs are relatively equal, right? So what that suggests is that there's a buildup of liquidity in this area. A lot of times, and I've said this to my students for years, you will see relative equal highs build up under old fair value gaps or above old fair value gaps, depending on like if it's a SIBI or VISI that you're looking at. Like a lot of times you see relative equal highs under a SIBI, or under a SIBI, and then relative equal lows over a VISI. because the market's building liquidity because it wants to run to this area. Now, once it gets here, I don't know what it's going to do. It could invert this and keep going up, or it could turn around and kind of break and do this. And so usually this is why when I trade the targets or when I have targets in mind, once the price hits the target, then you kind of have to take a second and step back and see if this was the ultimate draw on liquidity or if it's going to run for a higher level, right? So um, with that being said, there's a couple things. I think when I called this out last week, I wanted to see the market come back up here, but there's a couple other just levels that I'm looking at that the market might potentially run to. So in between where we're currently sitting in that all-time high, obviously we have that CIVI. We also have a volume imbalance here. And so, and obviously these highs here. So yeah, these are well, this got purged. But these highs up here, I think there's going to be a lot of liquidity. It's going to sit at this ultimate level. So this buy side liquidity level will be like the long-term target. And so I'll be trading to here. A lot of people ask me why I don't swing trade. Like if I do these projections like this, like why don't I just find the entry and try to swing trade things? And to be honest, like it sounds good in theory, and sometimes like I do hold trades overnight, but like very rarely I do that. But most of the time I'm in and out in the same session. And my whole thought process is if I know we're going to move up here over the next couple of days to weeks, all I'm trying to do is find the best setups each week to get in and get out on the way to this overall target, because you never know what could happen in overnight. You could hold trades overnight and everything could look good, and all of a sudden the market can crash due to some geopolitical event. There could be rumors of conflicts between countries, or something could happen where somebody important is no longer with us, and then that changes that causes the market to crash. So it's like I just would rather get in and out and then find the next opportunity. When you understand how the market works, you understand there's no shortage of opportunities and trade setups to take. So ideally what I want to see happen here, just on a higher time frame level, the weekly, since we created this, we basically traded over this. Get rid of this. We basically traded over this old high, right? So coming into last week, I wasn't sure if we were going to reject away from this or go higher. I said, if gun to my head, like I wanted to see price go higher because we really hadn't any bullish reasons to be bearish other than just us not completely closing above this high. But this week, not only did we close above the high, we also volume imbalanced over it. So it's a very small volume imbalance from there to there. Actually, from there to there. So a lot of that. Close that. Yeah. So we also traded back through that volume imbalance. So as I'm looking to go higher, there's a couple levels that I'll be looking at. Again, consequent encroachment of this huge weekly wick, right? This is a huge wick that I want to see the market kind of like, stay in front of. So ideally, that's what I want to see the market kind of stay above on the way to higher prices. And then so something like this on the weekly time frame, we'll kind of sharpen this up as we go higher. I think we're going to come back into that level. I don't know if it'll happen, when it'll happen. And if we go down to the daily time frame, again, that consequent encroachment kind of lines up with the low end of Friday's candle. So coming into last week, there's a couple things I wanted to see. Again, I said best case scenario, the market would drop down into this old fair order block right here, which there's also a very, very small fair value gap. You probably would miss it. So I said best case scenario, if I was looking to buy or looking to be bullish, this is the kind of level that I would want to see price retrace to for us to kind of get another crack at going higher. And it basically did that on Friday with NFP. A lot of times the market makers will use the news as an opportunity to continue to run price higher and take things a little bit higher. So that's kind of like the idea there. But ideally, I want to see the market kind of respect, again, consequent encroachment. I think there's going to be a really good opportunity to do that. So potentially something like this where we trade Back to the daily again, something similar to this. So I'm not going to sharpen that up, but ideally, I want the market to really run out and retrace. I will say that there's going to be a potential fair value gap that'll form with the close of the low end of Monday's price action, so potentially trading back into that range. But ideally, I want to see something like this play out. So I'll get rid of this just so it's more clear. And again, ultimately, I think we'll probably get up here to this 105.6 level, but ideally, this is kind of like what I'm looking at right now. So let me go ahead and go to let me go to the comments first. G's says, hi guys. Hey, what's up, G's? Let me hop down to let's go to Euro. I've been in this habit of doing the Euro stuff first. So ideally, Euro futures, which is going to be 6E1. It's the symbol for it. It's the same thing as Euro USD again. So if you're a futures trader and you want to trade the Forex currencies, most of the majors have a version of the currency. So I called out a couple things over the past week, and I'm going to strip. Actually, I'm not. I'm going to strip this chart here. And basically, if you look at the Euro futures, again, our long-term target, really, I have these relative equal lows that are sitting here, right? And because these relative equal lows are sitting right above a high or right above a low, we could get here. I'm just being conservative with the draw. So ideally, I want to see the market really come back into this range. Now, last week we had a few things. At a weekly time frame perspective, there's really not a reason as to why we should continue to go lower. We've just had straight price action. We've violated a couple old lows. We took out this low here, right? And so at this point, we had a break in market structure. So really, we've just been trading down and really kind of hitting old sell side levels and old imbalances and things like that. And so what I would like to see both on, again, in Euro and Euro futures is us really trade back down to that this low here. And continue to go down. And so from a weekly perspective, again, as long as we stay above this or stay below this weekly fair value gap here, I like bearish price. Like I like price to go down. It also lines up with a bullish dollar. So again, over the past couple of days, we had us trade back into this range where we also traded back into this daily fair value gap here, right? So ideally, if I'm bearish here, then I want to see a couple things happen. I want to see price invert this BISI. First and foremost. By invert, I mean I want to see this not respected. So something like this, right? It could break through. It could trade back into the top half of this imbalance here and continue to go down. The telltale sign is when we violate the consequent encroachment of this order block as well. So like I will feel really good when this inverts. I'll feel amazing when we take out this level too. So something like that, right? And at the short-term low, I'll be aiming for is really I'll evaluate how the market reacts to a couple of levels. This level at 1.061. 61. It might be slightly different on the futures chart, but this low on the daily time frame. And then again, the consequent encroachment of this wick. And I'm saying that all that with in mind with the idea that I'm not trading this election, or so this election, not trading this week. So I'm not gonna mess around with that, but these are the kind of levels that I can see price getting held up on. Again, the order block CE, the daily wick CE. So, and then this low here, right? And ideally, again, over time I want to see price head down to this range. I think this is going to be the overall draw on liquidity. I just don't know if it's going to happen all in this week. I don't know if it's going to get caught up on these levels here. So I'm kind of reacting as we react. But ideally, from a weekly time perspective, I think we're going to get here. And that's kind of like my, again, guns ahead analysis. That's what I think is going to happen. So ideally, I'm bearish on Euro USD. Especially another thing too is that when we respected this weekly level, we know that the higher the time frame, the stronger the if you trade traditional concepts, the higher the time frame, the stronger the support, the resistance, right? It's the same thing with these concepts as well. So like again, trading through this level, again, I want to see the market coming down here. What else? So let's go to pound futures. Same idea. The only holdup here is if we look at the weekly time frame. Again, best case scenario, I wanted the market to come back up in here. I think this will stay open. Oops. And this is a concept they call breakaway gaps. Let's say want to stay open. So again, we traded back into this range, and I told everybody I'm still sticking with this idea that we're going to come down here and take this low. All time, I think, because there is some trend line liquidity built up here on pound futures, I think we could come all the way down here. Again, pound futures, just for everybody who's not aware, same thing as GBP USD, right? So it's just it's the futures version of it. So 6B, B would be British pound, just like 6E is 6 euro, right? I don't know what the 6 means. Maybe somebody in the comments section can help me out, but I just know that that's what that symbol stands for. So the thing is, because this BISI is a bullish liquidity marker, it means that typically like price will go up when you see these. So because our bias is bearish, I want to see this invert, right? I want to see us invert this, meaning that we disrespect this gap and then come back into a retest it. Kind of like the idea of broken support turns into resistance, or broken resistance turns into support, right? Same idea here. But I want to see the market come down here and violate this. And if we don't, then there's not really a trade for me, right? So I need to see this breakthrough before I can feel comfortable looking for an opportunity to retest and go back in. So until that happens, I'm kind of sitting flat, but ideally I want to see that jump down. So going to the daily time frame, again, we're getting great market structure. What I don't like here is that we mitigated this entire gap and then still closed above consequent encroachment on the daily. But when we try to break out of this gap, we're still respecting it. So ideally, what I want to see happen here is us just continue to go lower, right? So there's nothing to really do here. And a lot of times when you're trading, a lot of it is going to be waiting. We think power of 3, right? Consolidation, manipulation, distribution is potentially what I want to see here. But there's really nothing to do until we come out of this gap, because I don't want to take, in theory, this bullish liquidity marker means the price should go higher. But when we're waiting on an inversion because our bias is lower, then we kind of have to be patient. And a lot of trading is being patient. You will avoid so many burns in your trading career if you're just patient and don't try to overtrade. So for me, like, I'm only looking for 1, maybe 2 good setups a week. And then I call it a week, I refresh my mind and then go back. It's not because these concepts don't work over time or, consistently work. It's because, there's a lot of user error that can happen when you take these concepts. And there's an idea called decision fatigue, which is a very real thing, right? Decision fatigue means that me as the operator of these concepts, like I can make mistakes, right? And if you think about it, we're all making thousands of decisions a day. The more decisions you make, the less quality decisions you make. And, if you place yourself in these situations where you're seeing your profit and loss go up and down day after day after day, even if you think you know where price is going to go, it's still stressful to watch it get there. So I only really try to shoot for 1 or 2 trades a week and call it a week. And over time, you get consistent with that, and then you watch your money grow over time, potentially, right? So, and then you could just place bigger and bigger trades with the same amount of work, right? Nobody gets into trading just to be like a slave to the laptop or slave to the computer. And so I feel like right now I'm at the point where I spend the least amount of time looking at charts that I ever have in my career. I literally do these breakdowns and then I come back the next week during my set days and I look to trade, right? And as soon as I hit my setup, my winning setup, I'm done for the week. So it's great. And I mean, everybody can see in the chat that literally that one trade is netting me 6 figures a year. So, do the math. So let's go to Nasdaq really quickly. So Nasdaq again. Last week I called out a couple of things. I said again, gun in my head scenario. I want to see price go higher. I want to see the buy side liquidity up here get taken, right? But we haven't got that. And so one of the things that I also was calling out that I was seeing was that there was a lot of trendline liquidity built up here, meaning that the market could just as easily run up higher and then go lower, or take out these lows, potentially come down here and then go higher. I think that's going to be what happens, especially after Thursday and Friday. If I clear some of this stuff off so you can see it, basically what we got here is the market. Get rid of some of this stuff. The market basically rejected this from the SIBI and then broke structure too. So at this point in the game, this is our kind of like this overarching fair value gap was kind of like our bigger draw in liquidity. And so if I'm looking at where we could go next, again, there's a few things here. I'm looking at this price swing. We could come back down to an equilibrium level. So this 50% level, I mean, I'm eyeing at this fair value gap because it's very apparent, and 2, it's near our equilibrium level. So I want to see the market potentially continue to go bearish, at least for the short term. Again, election year, we want to see, like in these years, typically the market does push higher. But if I'm looking at where's the money at right now, it's really sitting under the market. There's a couple levels here, right? So this sell side level here, and then this overarching gap, which is, I think, the biggest kind of draw on liquidity currently. So ideally, there's a couple things here. I'm just going to get rid of this gap, visibility. I'm going to get rid of this gap here so you guys can't see it real quickly. And ideally, if I had to pick something, I would want to say, I want to see the market trade back into this, right? Easy draw, kind of like the low-hanging fruit draw would be this low level at 19,817, and then obviously this bigger target here, and the ultimate target here at 19,422. I think depending on the market and all the stuff that's going on, this could be an easy swing for after Tuesday when the winner is announced, right? But I think this is an easy area. So I see the market coming back to this zone and then going higher. Once it gets here or here, who knows? And the reason I probably wouldn't trade this is because I still am very much bullish on this market. And I don't really want to find bearish setups, but I think this is an easy play, easy trade. So that's what I would be wanting to see over the next couple weeks, or over the next week or so, potentially getting down to here. But if it doesn't, I mean, again, I'm still very much bullish. So I won't be participating in this until we get some type of bullish reaction or a bigger, higher time frame uh kind of draw. I mean, there's a chance this could be the start of the bearish trend. I mean, we've pretty much been rising this entire year, but I mean, I doubt that that'll kick it off, but I'm still very much bullish. We'll see what happens. But ideally, based on current price action, this is what I want to see happen, at least to this 50% level, and then go higher. Let's go to comments. Yeah, amazing. Amazing. You can see everything trading. It's not rush and wait for the play to come out into your range. Yeah, 100%, man. Like trading, to be honest, trading is like very much like golf. Like it's not the type of game that it's not football, it's not basketball, right? Like it's not something you got to bring the drama to. It's like you have to play the course. You ever hear a golfer talk about like they're not playing against other people, they're playing against the course. Um that's very much what trading is. I'm not competing with the Lambo Raoul's or the Q Banks of the world or the whoever, the J Caps of the world that are making millions and millions of dollars. I'm literally just playing this game with the amount of money that I have, right? And so over time, you make the right decisions, it could work out in your favor, hopefully. But yeah. So same thing here. There's less of a like trend line build up here, but just looking at this idea of trend line liquidity. I mean, we broke structure, we violated this order block here and this fair value gap. We tried to trade back into this fair value gap, but failed. This is very easily the draw on liquidity. These relative equal lows here. I can see the market coming back down into those. This is very, very easy draw. So if I was kind of drawing out next week, maybe something like maybe running an old high, something like this. And then once we get down here, it's anybody's really guess once we take out those lows. But this looks very much like it's going to run these lows. So we'll see. Again, election week, anything is possible. Last thing, this was kind of like my fail safe. Again, I call this out on Monday. I said if we take out these lows, then we could go into a short-term bearish trend on, this is YM, this is US30. Same thing here. And that's kind of where we're currently sitting. Like I want to see the market potentially run into this BISI here. And then maybe something like that. Looking at consequent encroachment of this daily wick. Ideally, if we're going to be bearish for this week, then I want to see this stay below this wick here, right there. I'll get rid of that. Let's see. Especially since we technically broke structure by taking these lows out. If I jump to the weekly time frame, this is kind of a mixed signal one, because even though we did take out this order block here, if I zoom in, this technically is a bearish order block or bullish order block. We did kind of take this out, but we traded back into this overall fair value gap here. So I would probably leave Dow off the list. And then, I would just be looking at ES, Nasdaq, Euro futures, and pound futures. So I think that's all I'm going to do for today. But if you guys have any questions and you want to throw them in the chat, they could be general trading questions. They could be like, look at a chart. It's cool. But whichever you prefer, just throw them in the chat. I got a couple minutes before I got to log off. It's 11:50, so I'll probably get off by noon. And we'll call it a day. So, yep. So like I said, I'll be on for 5 minutes. Tick Tick Trader. I've never heard of Tick Tick Trader. Here, let me look that up. Tick Tick Trader. Are they a futures firm? Yeah, it looks like they're a futures firm. I've never heard of them. I wouldn't. 180K. The only ones I've experienced with are going to be, you know, My Funded Futures, Apex, the two. Um, yeah, I don't really. Kind of expensive. I'm looking at the numbers. Unless they have like a coupon or something, they're kind of expensive. But I can't really talk about them. I don't really know too much about them, to be honest. This is my first time hearing about it. But you're going to see a bunch of prop firms pop up over the next couple of, years. Futures space is still brand new. I do generally trust the futures ones a little bit more because they're more regulated. Um, if you're looking for forex prop firms, I would say Blue Guardian is again one that I'm gonna probably try and not go back completely, but like try and get some futures funding. I'm sorry, forex funding again, and try that again. In addition to this future stuff that I'm working on and have, and I'm gonna try probably Blue Guardian will be my next one. So that'll be probably the one. But as far as futures go, like I would stick with Apex and My Funded Futures for now. And then the other one is Top Step. So Top Step has been around for a while. So those are like the three. They all have their own specific rules, and I'll say like the whole point of a prop firm should be, yeah, let's get as much capital as possible, but um, also let's um, let's build our own personal accounts up because it feels amazing to have a actual funded account, that you don't have to worry about, um, that you can trade, and as soon as you hit the trade, the money is in your account. Like you don't have to worry about getting paid out. You don't have to worry about consistency rules. It's like it's your money. So I think everybody should be working towards using these funded accounts to build their personal. Um, so yeah, so you can do stuff. So yep. So, all right, guys. I'll stay on again. I'm on till about noon. I'll give it like another 2 minutes for any other questions, and then we'll call it a day. Cool. All right, guys. Well, I will let y'all go. If you have any questions at all, then let me know. And yeah, we'll call it a day. Peace.
Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.